Good morning. It's Thursday, December 11th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. I figured since Oracle was getting smoked overnight, I'd bust out the Team Oracle jacket. So looking at gold and silver, they are extending their gains after the Fed had delivered that interest rate cut, leaning a bit dovish here. So silver hitting a contract high overnight, 63.25. You have the gold market up $15 at 42.40. You also have copper snapping back about 1%. Platinum up 2% here, and palladium also up about 1.75%. So the U.S. Central Bank, they lowered their interest rate for the third straight meeting, keeping its outlook for just one interest rate cut in 2026, while changing the wording of its statement, hitting to greater uncertainty around future interest rate reduction. So the important point of that is that Jerome Powell will be replaced. There's questions surrounding what's going to happen with Lisa Cook. Those are your two hawks, basically, that are out there. And then also you have a changeover, a couple other Fed officials. So the Federal Open Market Committee voted 9-3 to cut the Fed funds rate by a quarter interest rate point to 3.5 to 3.75%. It was the first time since 2019 that you had three Fed officials vote against the policy decision, with dissenters on both sides of the spectrum. So the U.S. Central Bank also said on Wednesday that it would start buying $40 billion worth of Treasury bills per month starting December 12th here as it seeks to rebuild its reserves in the financial system, increasing overall liquidity, and that's going to further boost the gold market. So looking at the broader picture in the financial market, so you do have Oracle down about 11% overnight. The reason why it's important is that it is the 15th largest component of the S&P 500, weighting in at about 1.43%. It's dropping on disappointing cloud sales and more AI spending. So you look at stock futures, they are lower here on Oracle's disappointing cloud sales, those big spendings, reinvigorating those worries about the huge AI-related CapEx. So you're going to have that narrative kind of shift when it went from hawkish Fed. Now it's going to be the AI story again. So you got the S&P 500. It did close near those October record here. And the question is, will we have that Christmas rally and will it play out? So an observation, just an observation. Looking at the past 15 years of data, the S&P 500 has risen 13 out of the last 15 years, starting on December 19th, ending about February 15th. Now the same thing is that silver has also rallied 13 out of 15 years, starting on that same date here and ending about a week earlier on February 8th. Of course, those are just seasonals, and past performance is never indicative of future results and should not be the emphasis of your trading strategy. So the S&P 500 down about 0.5% as of this recording here in Chicago time, and then also at 5:25 a.m. Chicago time, with the NASDAQ also down about 0.75%. So Oracle now plans to spend about $50 billion in fiscal 2026 on data centers. It's amping up those concerns about costs and the amount of borrowing that's required to develop these AI infrastructures. So interest rate expectations, that's one thing that we do observe on this, because everything that I do is basically a repeatable process, and I've been a futures commodities broker for about 25 years here. So what I'll look at is the CME's Fed Watch tool. So now we got the January 28th meeting. So you'll want to go change your bookmark from December to January, and now market participants are looking at a 19.9% likelihood that the Fed will reduce rates by 25 basis points down to a range of now 3.25 to 3.5% at its January meeting. So looking at the economy, how to tell if Jerome Powell, I had a lot of questions about this one, is if he's going to be hawkish or dovish here, because I had told a lot of clients that I really believe that the consensus here is hawkish. I really believe he'll be dovish. So you want to look at what's the narrative. You want to also look to fade the narrative here. And then you look at the dollar. Is it rising or falling leading up into that meeting? Remember, the dollar had peaked. Now it's starting to come down, goes to more of a neutral trend. You get the euro currency breaking out to the upside. And if you look at the Canadian dollar, the Australian dollar, British pound, all pushing on up here. So then you look at the yield curve here. Is it flattening or is it steepening? If it's flattening, that means the short end of the curve. That means most likely the Fed's going to be hawkish, and it flattens that out. Well, it's been steepening here recently, and it continues to steepen. Now, today we'll get some economic data here with trade balance for September, followed by wholesale inventories. We also should get that initial claims data, which is going to be very important for future interest rate cuts. The continuing claims data, we'll want to watch watch that as well. So again, the dollar index here is sitting at 98.51, pricing in more interest rate cuts, a dovish outlook here. The euro having more of a bullish trend here, 117.13. So that's continuing to push up. What's happening over in Europe is you've got a stagflationary event. You've got their inflation going up here. You've got their growth declining. Their ECB wants to lean hawkish here. Not sure if they could do that, but that's one of the driving factors for the euro currency. You look at the 10-year treasury yields hitting about that 4.2% resistance here that I outline in a lot of the charts I send out. Now reversing back lower to 4.15. You look at the volatility index here. Really big sell-off here, big decline down to about 1690. You got Bitcoin coming off with a little bit of risk off here with the U.S. equities down at about 90,500. And you do have S&P 500 gamma exposure sitting positive. You go over to Europe and Asia because I also like to see how are their markets playing out here. Well, in Europe, those stocks were muted, while Asian equities, they erased their early advances and declines. So they have a similar play as what happened with the S&P 500. You had the Fed meeting, we blow off to the upside, then we reverse overnight. So the MSCI Asia Pacific Index, it fell as much as 0.7% after rising 0.6% in that mid-morning trading session. So you look at the macro markets and you go over to China because that's important for like many of our industrial metals and oil consumption, things like that. Well, you got China's economic policy measures. They're planning to adopt supportive monetary and fiscal policy, hinting to more interest rate cuts and trying to stabilize their budget here when it's a very sizable budget that they have at the moment. Now, some of the flows here, and this has been one of the primary drivers. So when you look at the precious metals, it's really central bank buying. You want to see them in an interest rate cutting cycle here. You want to see also ETF flows continue. So in the ETFs, they did sell some gold, but they bought silver, platinum, and palladium. So the exchange traded funds, they cut a minuscule amount of gold. It was like 8,800 troy ounces, and total gold held by ETFs about 17% this year, rising 17% to 97.8 million ounces. You know, the silver market, they added about 2.45 million troy ounces of silver, and palladium holdings increased for the 6 straight days. So the gold silver ratio continues to push lower here, hitting about 87-1 in the overnight session. Now it's about 87-1, 67-1. Now it's 68-1 here as of this recording, and we'll continue to watch these things play out. If you guys got any questions on futures options trading, you don't know how it works, we got a great team that can help you get started. We've also have a library of different information here, real short 2-3 minute courses on there that we can, you can click through here, and it gives you a basic explanation of it on the different contracts that we have and things like that. And if you like to open up an account, super easy to do. It takes 5 to 10 minutes to do so, and you'll be plugged in and you'll have that pure price play on the precious metals where you can trade. So again, you got a question, shoot an email, info@bluelinefutures.com. Remember, the futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.